Silver's holding up. Silver's got a lot of momentum, as you just mentioned.
Yeah.
And it's kind of a feeding frenzy in there. So it hit that $100 kind of whole number, that mental resistance level. A lot of people will say, if it hits 100, I'm going to sell. Silver held above that and closed. And I think that has to do with it's a small market and a lot of people are catching on to it. And even if people were selling at the 100 mark, which we saw heavy volume, there's still a ton of buyers jumping in because it hit 100 and it's getting people with FOMO and people who are new to it saying, I want in before it goes even higher. So I think there's enough momentum in silver to keep pushing and holding it through that resistance. Gold is a slower moving beast. 5,000 is a pretty big number. It just has a bit different characteristic to how it moves. But gold definitely has a lot of momentum here. I think it's going to break 5,000. I think we're going to 5,200 here probably in the next week or two. So it's still got a lot of momentum, but it just hasn't cleared that whole number of 5,000 yet. So I think the technical target based on the charts was pointing to $106, and we're almost there.
Yeah.
I think we could see things blow past that. I think we're in this feeding frenzy mode. Silver could spike to 120, 130, 140. We could see a very big parabolic spike. It's kind of one of those last pushes, and I think gold's going to do something similar. Right now, silver has about 3% upside for my target, based on technical charts, where price should go. After that, it's however sentiment takes it after that. And I think we could see it go higher. Obviously, we're in this feeding frenzy right now, and I think it's actually still picking up speed.
Yeah.
So I think you're going to be pretty excited to see where silver is probably in a week or two from now. Well, if we start to see money flow out of AI stocks or the stock market in general, it's going to go looking for a return. Money's always looking for return on investment. And whatever is performing the most, the best at the time, usually gets the majority of that money. So if everybody who is in AI starts to move out of the stocks in that space, they're going to look for what's hot. Where can they put that money now that they don't believe in the AI bubble? They see it going down. It's probably going to move into precious metals. And this is what we saw back in 2007, is we saw money start to have mass exodus from the stock market. And it all just was flowing right into the precious metal space. And the metal space is a very tiny pocket. In the whole picture, it's very small. So when you have trillions and billions of dollars piling out of the stock market every day, and it's looking for money and it moves into the precious metal space like miners and physical metals, they move very quickly. So I think that's what we're coming into, is where is the peak going to be? You better be long metals, because I don't think the rally's over yet. But we're definitely seeing signs that we're close to, I think, a significant high in precious metals.
Investors are increasingly reallocating funds from AI stocks and high-flying equities into tangible assets. Historically, mass outflows from stocks, such as during 2007, flowed into precious metals, generating rapid spikes. The metal market is small relative to equities, so even modest capital inflows can have outsized impacts. This influx can drive gold, silver, platinum, and palladium sharply higher in the short term. Yet, market psychology is delicate. The initial stock sell-off boosts metals, but prolonged equity weakness can trigger fear-driven selling, causing metals to retreat. Timing and sentiment are crucial, as bubbles form rapidly and can unwind just as fast.
I'm saying if the stock market sells off over the next 1 or 2 months, we're going to see gold and silver and platinum and palladium skyrocket for the next 1 or 2 months.
Even though in the past, like in 2008, 2020, even 2022, the sell-offs in stocks at those times coincided with the sell-off in gold and silver initially.
Right. So the initial move down, say Magnificent Seven stocks fall to 20%. That fall in the stock market, that first move is going to go into precious metals. Now, if the Magnificent Seven or the stock market doesn't find a bottom there, it trades sideways, and then it starts another leg lower, that's when metals are going to fall, because that's when everybody now is actually starting to sell. There's going to be net selling. There's going to be fear, margin calls, all of that stuff. So the first move down in the stock market is going to fuel precious metals. If the stock market fails to recover, when the market starts to fall again, equities, it's going to pull the precious metals down with it. And last time we saw this, gold fell 34%, silver down over 60, platinum, palladium, both over 60 to the downside. And it's just really, there's going to be a lot of selling pressure and a lot of air let out of this bag. So actually, just recently, we liquidated our QQQ position, and we're actually, we're 70% cash in terms of that portfolio. We're still long equities, and we actually have physical gold as well as a play here.
Protecting capital is critical during these extreme moves. Precious metals and equities can swing violently. Initial spikes often precede large corrections. Investors who ride early gains without caution risk heavy losses. Diversification, cash reserves, and defensive positioning are essential. For example, reducing exposure to high volatility stocks and retaining physical metals provides stability. Past cycles show gold may drop 30 to 34%, silver 60% in a correction. Awareness of margin calls, panic selling, and psychological traps can prevent catastrophic losses. Strategic exit points and scaling out positions, rather than chasing every peak, ensure gains are protected while still participating in potential upside.
I mean, we just went defensive a couple days ago, right? So
Okay.
this isn't like we've been sitting in cash.
Sure.
We have been playing the upside the whole time.
Sure.
When the market runs, the stock market goes higher and it shows a strong trend, we jump on. And so we do ride it higher. Yes, I'm always bearish because I'm trying to get people to protect themselves, figure out if they have a plan or not. Because
Yeah.
when the music does stop and things turn down, the initial drop is very fast, very painful, and it's usually big enough that when people take that first hit of 20% or more, then they get into this phase, they're like, well, I'm down so much now, I'm just gonna have to ride it out. Meanwhile, they don't realize there could be another 30% loss on top of that, not to mention wasted years for the market to recover. So I'm just trying to get people to understand that not everything always goes up, and as much as you like it and everybody's bullish precious metals and stocks here, there is going to be a time when they're not favorable and you don't want to own them. And you need a way to identify and a way to benefit from when they collapse. Silver's holding up. Silver's got a lot of momentum, as you just mentioned.
Yeah.
And it's kind of a feeding frenzy in there. So it hit that $100 kind of whole number, that mental resistance level. A lot of people will say if it hits 100, I'm going to sell. Silver held above that and closed. And I think that has to do with it's a small market. And a lot of people are catching on to it. And even if people were selling at the 100 mark, which we saw a heavy volume, there's still a ton of buyers jumping in because it hit 100 and it's getting people with FOMO and people who are new to it saying, I want in before it goes even higher. So I think there's enough momentum in silver to keep pushing and holding it through that resistance. Gold is a slower moving beast. 5,000 is a pretty big number. It just has a bit different characteristic to how it moves. But gold definitely has a lot of momentum here. I think it's going to break 5,000. I think we're going to 5,200 here probably in the next week or two. So it's still got a lot of momentum, but it just hasn't cleared that whole number of 5,000 yet.
Silver recently broke a key psychological barrier near $100, sparking FOMO-driven buying. Momentum remains strong, driven by both retail and institutional demand. Gold, slower but steady, is poised to challenge $5,000 and potentially reach $5,200 in the coming weeks. Miners have surged, catching up with metal prices, yet their accelerated rise hints at short-term froth. While further gains are possible historically, these late-stage rallies often signal approaching peaks. Recognizing these patterns allows investors to lock in profits strategically. Despite euphoria in the metal space, technical signals suggest a period of high volatility is imminent, with parabolic gains potentially followed by sharp corrections.
Do you think the whole metal space is a bit overcrowded right now?
I do. I think it could still get more overcrowded. I don't think we're quite in that euphoric blow-off phase. I mean, I think we're close. I think we're like weeks away potentially from a huge spike in gold and silver. But I mean, it could be very short-lived. It'll be swift. It'll feel good. But yeah, at some point you do have to be happy with a gain. I was talking about this with subscribers in our mentoring session last week, which is at some point, if you've got huge gains and things are looking frothy, like right now, I believe silver and gold are in the final push higher, and I think we're going to see them peak out, and we could see a big correction. I think we could see a 30 to 60% correction in metals. And so knowing that and the sentiment where it is right now, because I believe it's very crowded, but I do think there's still more, I hate to say it, but like suckers who are going to get squeezed in and buy in this feeding frenzy and drive it higher. You do at some point have to be like, okay, it's almost over. I'm going to start protecting and start to scale out of these positions and lock in some gains. And at some point, you just have to be happy by leaving a little bit on the table. Bubbles like what we're in right now, where silver, if you look at the monthly chart, it's gone straight up. At some point, it's probably going to have a very sharp correction and come straight back down. And you just have to be happy saying, you know what, I caught a huge chunk of this. I don't care if it spikes up temporarily a little higher without me. I want to lock in some of my profits. And that's where we're getting close to, is I'm about to start trimming off some positions as soon as I see some more significant signs that it's getting closer to a peak in this bubble. Bubbles are very hard. You can't really predict them, and you don't know where the top is. So at some point, you just start scaling out when you're satisfied, and you're not going to panic if it keeps going higher without you.
Yeah. Is there anything right now that you would go all in on long?
There isn't.
No.
We're I'm nervous for equities. I'm nervous for precious metals. There isn't anything shiny. Believe it or not, one of the other things that actually looks like a good trade is actually like an inverse ETF on Bitcoin. I was talking about this the other day. I think it's BITI. It looks like Bitcoin could fall about 30%.
Markets beyond metals also offer opportunities. Bitcoin, for example, shows bearish patterns that could lead to a 30% correction if equities falter. Inverse ETFs on cryptocurrencies can provide swift, tactical moves during downturns. While metals remain relatively stable with slower, more predictable trends, highly speculative assets like crypto and tech stocks react violently. Savvy investors monitor correlations between equity downturns and alternative assets to hedge positions. Maintaining flexibility, following trends, and avoiding assets in steep decline are key principles. Timing and discipline allow participation in rising markets while minimizing exposure to sudden crashes, ensuring long-term capital preservation.
Yeah, it has a very big bearish pattern. And if the stock market tops, I think precious metal or Bitcoin is going to go down with it. So out of all the plays, Bitcoin, I think will be one of those very swift moves. We've traded Bitcoin in the past. We traded it. The last move was about a 40% move that we caught. This one is about a 30%. And what I like about Bitcoin is it's a very mass psychology play that when it starts to break down, that group of people said most of them tend to just bail and sell. And it creates a very swift move. So you can hit your targets, hit your lock-in profits quickly. I like that for Bitcoin. So I wouldn't say I go all in on it by any means. It's a small trade, but it's one downward play that I think it's got some good potential. Gold to me is much more stable. It doesn't drop 20% a day like Bitcoin did, right? So even a big correction in gold is like 34%. Like that's a pretty darn big correction for gold. Bitcoin can do that in a few days. And I believe in physical metals. I'm not a big crypto guy, as most people know. So I like to invest in stuff that I believe in, that I believe has, solid value. So that's where I would go. And I think long term, I think gold's, going to be breaking 10,000 and beyond, but there's a roller coaster ride in between now and that high target.
Despite recent gains, the metal market remains fragile. Bubbles like the current silver spike are hard to predict, and topping points are often only identifiable in hindsight. Long-term targets for gold extend beyond $10,000, but interim volatility will be extreme. Strategic scaling out of positions, locking in profits, and readiness for sharp corrections create opportunities for the next major leg in the cycle. Miners may provide leveraged gains after the pullback, reminiscent of 2009-2011. Understanding market psychology, timing trends, and balancing between stability and speculation equips investors to navigate both euphoric highs and inevitable corrections, positioning themselves for sustained wealth growth.
Flip the script. I do the opposite of most people. Most people like to pick bottoms.
Right.
If it's pulled back, a lot of people think, there's opportunity to the upside. I don't do that. I want to own things going up because I want to benefit from the trend that it's in. Bitcoin is going down. I don't want to hold an asset falling. So that's the way I look at it. I would much rather own something going up because who knows? Gold might not top till 7 or 10,000, right? That's why I'm bearish on the equities market, but we're still long. Just because I think it's topping doesn't mean it is topping, and we have to follow the trend. So to me, I would much rather own gold. It's less volatile. It's in an uptrend. Those are the two things that I find value in. And even if there is a big pullback in gold, in the markets, Bitcoin is most likely going to have a bigger correction anyway. So that's kind of where I stand on that. I mean, the miners are doing very well. They've been on fire. They're playing catch up significantly now to gold and performing very well. I like miners, but the fact that they have all taken off and we're seeing silver go parabolic, there's a common kind of move here where everybody's kind of just piling into this space. So I feel like it's pretty frothy. I think miners still have some upside, but overall, they've had a huge chunk of their move. And I know a lot of people have held miners, from the 2011 market peak. And when you look at the monthly chart, like from silver and gold and miners specifically, they've held for like a decade. And then in a few months, finally, they've got these big returns. And because they've held it for 10 or 13 years, a lot of people think that this move that's only really a few months old is just starting. It's just the beginning. But to me, all the signs to me are saying, hey, you know what? I think we're about to actually see it come to an end. And usually when everybody's super bullish and think it's just starting, usually it's coming to an end. So from a psychology play, I think miners they've valued in the current price. I think there's a bit more upside, but I'm nervous. I think they're going to have a big correction, which is going to be an opportunity. I think this next pullback is a huge opportunity because once we have this pullback and say a financial reset, be like 2009 to 2011 again, people won't focus so much, I think, on physical. They're all going to be focusing on the miners. Yeah. And that's where I think you're going to get the big leverage play in that space, which is going to have some big opportunity.